Hi, this is Sahil here. I can hear you
Hi, Sahil. Are
loud
you
and
able
clear.
to hear me? Yeah. Okay. Great. 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 So sorry for the delay. There was some technical hitch. We just sorted it out. And welcome everyone. And thank you so much for being patient. So this is our third session with Ernest. And so Ernest now doesn't need any introduction as they're offering some great alternative investment opportunities in the real estate space. And they have had two very successful projects, the Project Rise and Project Woods. And we have with us the senior management from Ernest, Ashish, Khandelia, and Sahil Shah. Both of them don't need introduction. Ashish has been with the real estate industry for the longest time and has done some great work with prestigious firms like the KKR. And Sahil also has considerable experience in this area. So, welcome, Ashish. Welcome, Sahil. And thank you for being patient. So,
Thank you,
and
Shaina. Thanks for
mhm.
having us here today.
Many, many congratulations, Ashish, for the wonderful last two projects. I believe, and facts also prove me right that they've been very successful. Why don't you tell us about those? How did they go? How was the last few years for you?
So Shaina, I think just to recap it for some of our audience, and some people will be new in today's forum, but we started this whole earnest venture earlier this year in February when we went live. And the whole idea about Earnest is to bring fixed income opportunities that are secured by underlying real estate. So this is exactly what we had done in our institutional, jobs before starting this venture. And the idea of Earnest was to bring institutionally diligenced and managed opportunities which can offer a much better fixed income return compared to what we get on usual fixed deposits and debt mutual funds through these kind of things. So our first project, Project Rise, that was in Chennai. I think we invested that in February, and it's going well. I think the construction progress is pretty good. The investors who invested in that can track that through the portal. You post regular updates in there. It has already made three interest payments that were due, and they were all as per the schedule. Uh, then I think about couple months back or sometime late August, we had opened up a new opportunity which was Woods. And again, ex-partner of mine from my KKR days, they're doing some great work in Pune. And I think the project continues to perform very well. That also has been paying interest and a little bit of principal premium prepayments as per the schedule and as per the contract. So I think that has been going well. I think with this third project which we are here to talk about in this last few months since we went live, we have crossed 100 crores. So that way we have received a very good and encouraging response from the investors, and we're just looking to build on that.
I guess the last two projects have spoken for themselves, so your trajectory is upwards now. So, Project Vista is what we are discussing today, and so tell me, how is Project Vista different from the last project that we had discussed? Because this seems a very niche project, Ashish. Uh, few apartments, and so tell us about it, or Sahil.
Yeah, so I'll just kick it off a little, and Sahil has led this transaction, so he'll speak more about it. So as you know, as a firm, I think we continue to really like the residential space.
Mm-hmm.
Before I get deeper into Project Vista, just at a macro level, residential as a sector is doing very well. 2022 is turning out to be one of the best years in terms of residential volumes for tier one cities. right? In Mumbai, especially where we will talk about Project Vista, has a absolutely fantastic year. Despite rising home loan rates have gone up by almost 2%,
Yes,
right? And they have
yes,
increased from about 6.5% to about close to 8.5% now. Even at 8.5%, they're fairly reasonable. And despite this increase of 2%, the momentum continues well, and that's kind of just driven by fundamentals, driven by the fact that post-COVID people are interested in slightly better homes, looking to upgrade, etc. So all of that is very clearly playing out. Now, uh, now Project Vista is more in Mumbai. I mean, Mumbai, of course, is one of the foremost residential real estate markets in the country. Also, the most expensive one. So you do have
yes.
projects which are very large, but then also smaller projects are also much larger in value. And this
Absolutely.
particular project is located in a fairly prime locality, which is what we call South Central Mumbai, or Prabha Devi for people who are from Bombay, and they will recognize that. And and it's right next to a very, very prominent, location, or in the sense, a landmark, which is Sri Siddhivinayak Temple.
Siddhivinayak,
Right.
yes.
So yeah.
Right.
So it's like a stone's throw away from there. We really liked who is
Mm-hmm.
doing it. We liked where it is located. We in fact like the fact that it has only 46 units to sell, so a very small inventory where the risk of that not selling
Yes.
is low. So those were all the factors that prompted us to do this. Yeah, but I think I'll hand it over to Sahil to talk more about it as we get into questions, Shaina.
Hi, Sahil.
Right. Thanks, Ashish. So I'll just add to what Ashish said about Project Vista. This is a very prime plot of land next to Siddhivinayak, where the developer is building a primarily a residential project. Total project size is about 77,000 square feet. Not so not very large in terms of execution. Um, it has a total of 59 residential units, of which 13 are sold, 46 to be sold, and and the product is mainly 3 BHKs, and a few 2 BHKs to be which are available to sell. So mainstream product for the market. Uh, the location is good. The views from the top half of the project are quite well and highly sought after. The developer who is doing this, and who is the borrower for us, is a old has been developing old developer, 30 plus years of experience across the MMR region, has developed and delivered 20 lakh square feet to date. Fairly low leverage uh, across the group, and is quite asset rich. So, between the project location, the partner that we have, uh, and the nature of the facility, which is largely construction finance. So most of the proceeds go towards funding costs of the project. It's these are the reasons why we like the project. Overall, the quantum of the loan uh, against the against the project is quite reasonable. It provides a cover of 2.6x, which is very healthy, uh, and uh, and that provides significant buffer for the lenders here. The you know this is why we like it. The security package is pretty good. There is a mortgage and land, pledge of shares, escrow controls, whereby the bank accounts are controlled through the debenture trustee. Uh, a fairly robust security package. Moving on to the to what is the opportunity for investors. This is this would be an opportunity to uh, to invest in a paper or an NCD which gives investors a 15.5% IRR. It's an overall
So,
door-to-door
Ashish,
three and
before
a
we
half.
go there, sorry, I'm interrupting you. Ashish, before we go there, could you tell us what stage is the project in right now?
Right.
I mean, has it
So the
started
project.
building? Which stage? Yeah.
Correct. So the project is at the second level out of 34 levels in the project. Uh, Material approvals for the project are in place as confirmed through a third party diligence. Uh, and project and the work at site is ongoing and full swing.
Yes, Sahil, please continue.
Yeah. So yes, moving to the to the underlying instrument. This is a instrument which offers which offers investors 15.5% return in IRR terms. It's an overall paper of the 3.5 years from today. Though principal repayments start from the 27th month from today. Interest servicing there's full interest servicing on a monthly basis, starting from the first month itself. So uh, so fairly good, good cash flow profile uh, for the for the investors. So I mean, I'll
So, how
pause there.
are these are NCDs, right? Yeah, these are NCDs. So, how are these NCDs secured for the investor?
Correct. These are non-convertible debentures. The security for all the debentures is the land building and the units within the project. In addition to the personal guarantee and the personal guarantee from the promoters of Eon Group, which is the borrower here.
Okay, okay. So for an investor, what does an investor look forward to while investing in this
So
kind of an opportunity? The interest rate or in the lock-in period? Could you throw in the light on that?
correct. So here, for investors, the proposition is similar as earlier opportunities and the larger theme that we are playing, which is which is you're getting more than 2x the return than other traditional debt debt products in a man in a secured manner and in a manner in which risk is mitigated, where where you're going into a very strong real estate cycle where the have been very good, and in a location which is very prime and sought after. So, so I think those, from an investor standpoint, I think uh, those are the key highlights. From a lock-in standpoint, while there is no lock-in for investors to from exiting or selling these NCDs, so there is no put option on the developer, but the investors can sell it in the secondary market. However, the liquidity in this market is fairly low, and it's not guaranteed that a buyer can be found. So while investing, investors should think of this as a hold to maturity paper, whereby their time horizon needs to be equal to the or at least equal to the underlying debenture tender.
So, Shaina, I will
And
just
yes, yes,
add a
Ashish.
few, from an investor's perspective, it is very important that they understand what is the risk and what is the reward and what's that they're trying to balance. So while Sahil already
Absolutely.
touched upon the fact that there is no lock-in and all that, and these are freely transferable, but these are unique opportunities that we create from time to time. And to that extent, we continue to hold a significant portion, generally at least 10%, into these kind of investments throughout the life cycle of the project, from our own balance sheet, right? So to make sure that we are aligned with the investors in that sense. But what's important is, yes, they do offer much more return than your typical debt, mutual funds and FDs. At the same time, there is a certain element of illiquidity in here. So you said you shouldn't be parking any kind of emergency funds in here, but at the same time, what you would otherwise keep in typical low yielding debt products, if you want to allocate a portion of that into something like this, and you're happy to hold it for, whatever 30 to 36 odd month, whatever the tenor of this one, you can benefit from this thing. From a risk point of view, yes, are they more riskier? Yes, they are. But at the same time, that is exactly the work that we do to try and manage that and make it transparently available as to what's the underlying. So people can take a bit of a call on their own and certainly reach out to team for further questions around that.
Right. Ashish, a question that came to me while you were enlightening us on these details was that how many units have actually been sold, or are there have some units been sold out of these 46 units?
I think out of the total project, about 13 or 22 odd percent units have been sold in this one, and 46 is what is left to be sold.
Okay, 46 is what is left to be sold. Okay, and what are the
Yes.
total number of units?
Yeah, just under 60.
59. Yeah.
Yeah.
There are
Okay,
59
okay.
units available to sell on the resi front. Plus, there are a few four commercial units. Out of the 59 resi, 13 have been sold. 46 available
Oh,
to sell.
yes, I was asking,
Sorry,
yeah, I was asking that how does the investor get a repayment of the interest as well as the principal? I mean, is it in installments, or is it the principal is returned in one go after 36 months? How is it?
yes, the interest is paid on a monthly basis to investors at the end of each month, and principal repayments is in six equal tranches starting from the 27th month.
All right, all right.
Which is Sahil, which is with month, if you can say that, it'll be easier for people.
Right, that principal repayment starts from February 2025.
All right, all right. And so, what are the necessary steps that Ernest is taking to mitigate the risk? Because residential projects do come with an inherent risk element attached to them. Whether sometimes the work stops altogether. There's some municipal permission issues, and uh, so many other things around, and especially in that area where you're talking about, it's a very prime area, and but Mumbai is known for its lot of MCD issues and stuff. So how is Ernest? Is there a third party which is monitoring the project on behalf of Ernest? Are you guys doing it yourself?
So I think I'll add couple things here. One, of course, we will get into the specifics of how this particular project is monitored, but also as importantly, and this by and large applied to almost everything that we do, is the few guardrails that we always follow when we are trying to select these opportunities and as we invest in them. Is first and foremost, it starts with the borrower and the group and their credentials. In the sense that, do they have enough history, do they have enough experience of doing these kind of things, right? So that's one. I mean, here in this particular project, and if we will look at the other two projects, we have always seen that these players have at least more than 10, 15 years. In these three cases, they have more than 30 years, but we want at least 10 to 15 years of experience. And with that, comes a lot of maturity in terms of how to handle an issue if it were to arise. The second very important thing, and Shaina, you make the right point, that approvals and permits are very important. So there is a fairly detailed diligence that is undertaken before these investments are made. These diligences are done by experts, and these are the same experts that advise on very large format deals. So as a firm, we not only do the business that we do under Earnest, but we also do a lot of work with large foreign institutional investors. Right? To give you an example, last year we advised on a transaction where a large foreign investor invested 1,000 crores in a group called Embassy Group in Bangalore. Now, the firm that was involved in that transaction in doing monitoring is the same firm that is monitoring this EON project also for us, right? And is the same firm which is also monitoring our other two projects, right? So again, that's a very important component for us to make sure that there's regular monitoring and there is proper diligence before we go in, right? And a lot of this approval risk is therefore addressed before we enter. If there is anything, so we as a principle don't take any kind of discretionary approval risk, like anything which is not as per the normal norms, and people have to go and ask for any kind of an exception, we avoid that. So that I think is the other key thing. Apart from that, really speaking, if you have proper approvals in place and if you do have a financial closure on the project, then the chances of projects, getting stuck is low, and that's something we very actively run various different scenarios, and even if people will get into deeper material, they will see some of those scenarios in here to ensure that even if there is a little bit of a delay here and there, it does not impact what's promised to the investors.
Okay, got it, got it. So, yes, as you said that these are, as Sahil was sharing, these are NCDs and interest rates are definitely better than the FDs and debts, although debt has also given improved, debt funds have given improved interest rates recently. However, how is the taxation on this? Is it a normal slab rate taxation? Is there any indexation benefit?
No, it is normal slab rate taxation. The marginal tax rate of the owner or the uh, buyer of the NCDs apply.
All right, all right. Um, so you've already spoken about the approvals. You've spoken about this thing. So for an investor, is there a minimum amount they need to start with, and do they have to invest the entire amount in one go, or how does that work?
Correct. The minimum ticket size here for this is 10 lakhs and multiples of 1 lakh thereafter. And yes, the entire amount that the investor commits, will be invested at the time of investment, which is upfront.
All right, all right. So any other information that investor is important for the investor regarding the project, any more risks, any more underlying risks from the market? There is an overall loom of depression, and there is a overall this you know markets have picked up. So when markets pick up, real estate may not may not be as exciting as it was the last few months, or in the last 1 year or so. What is your perspective on that?
Uh, Right. So a couple things, with respect to real estate and residential markets in particular. Currently, what we are seeing is we're in the middle of probably the best year in the last decade that residential has seen in terms of volume of sales. And this is across the top 6 7 cities, or top 6 7 tier 1 cities. Coming to our specific micro market, which is South Central Mumbai, that has been has seen some excellent volumes over the last 12 months, with projects in the vicinity, surprising on the upside. Like, for example, a project which is 500 meters down the line from our project sold sold 30 units in the last, very similar config of apartments, sold 30 units in the last 12 months. Then there are larger branded projects in our vicinity which have sold 250 units each in the last 12 months. So so we are seeing a very robust cycle for residential, and we think it's driven by affordability, where last 6 to 7 years have seen flat to lower pricing for residential units, whereas incomes and salaries have grown by at least inflation, if not more. And second somewhere there is a latent demand for upgrading your wherever your place of living, after which was triggered by COVID. So a combination of things, you're almost seeing the physical markets doing very well. So, and we don't see that while interest rate or mortgage rate is a headwind, at current levels, we're not seeing at least any significant impact on volumes. I mean, as the absolute rate still remains in the reasonable category at about 8.5%. Or
So, Shaina, I'll
Well,
just add a little bit of a global perspective to what Sahil
yes,
just mentioned.
Ashish.
And there was a very recent Morgan Stanley report that compared how prices across the world have performed between 2015 and it was up to middle of 2021. And globally, some of the housing prices have actually come down since then because of the raging inflation and very high interest rates now. So, but if you will compare that, the globally in the Western world, especially and including China also, price increase in real terms, inflation adjusted terms, was at the top end almost 60% plus for a country like New Zealand, 40% plus for a country like United States. I think it was 30% plus for China, and for India it was minus 1%. So the last 6, 7 years have been extremely tepid, and it was also a function of several different local factors that happened. RERA came, demonetization happened, then credit crisis happened, GST got applied to real estate. So all of these factors were actually very painful when they happened, but at the same time, they have really helped in consolidating the sector, in removing fringe players, in basically not too much of new inventory getting launched, etc., etc. So over these years, when you look at it from an inflation-adjusted perspective, I mean, between 2015 to 2021, we were at minus 1%, right? And since then also our price increase has not been more than 5, 6%, though the volume increase has been substantial. So that's exactly what is starting to play out. And then despite interest rate now being around 8.5%, it is still among the lower levels for almost the last decade. And if you will actually look at affordability, which is a metric that people look at as to, what is the EMI versus the monthly income, and that ratio is probably on the lower end for almost over the last 2 decades. So as a function of all of these things, we are seeing continued momentum in residential. Also, to your point, a lot of this momentum is actually coming from end user sales. So it's not too many investors buying, and that is when this whole thing about stock market versus buying real estate and all that plays out a little bit more. But now the demand is coming a lot more from end users as opposed to investors, which also is a healthier trend.
All right. So sounds the all of this sounds promising. Thank
And
you
I think
for
just the
extensive
last point
information. Yes,
to
yes.
to add to that is also the fact that in this specific case, we only have about 46 units to sell in a location like that in a city like Mumbai, for a mainstream 2 to 3 bedroom units. So we had a fairly detailed discussion with the developer, and they are very confident. And we also had a fairly detailed session with an expert selling agency, and they were also pretty confident about being able to sell these units quite comfortably.
That, Ashish, as you say, that is true. And while you were talking about that, I was thinking that it, of course, as Sahil was saying, that through COVID, people have wanted to shift to bigger homes, and they now have the financial means to do so. But this becomes, since the location is so prime, and this becomes a bit too aspirational. These units won't be inexpensive by any means. So this is not your usual Malad, apartment, two-bedroom apartment, or this is really a prime apartment. So which means the prices will be skyrocketing, and as you yourself are saying that Mumbai real estate is uh, out of the roof. So I really hope that there are these, as people who have that kind of chunk of money, or are ready to take loans on higher interest rates at this moment.
Actually, no, I think, and Sahil, feel free to jump in. So these are not that way. They are certainly aspirational in the sense they're very good apartments, good size product, but they are not by any means, this is not the luxury segment that we are talking about. I mean, these apartments are between 4 to 6 crores. Today, in a good development, even in Goregaon and Malad, the apartments are of the same price, right? For Bombay, I mean, 4 to 6 crores is a very, very acceptable range. I mean, the true luxury, I mean, if you go just like literally a kilometer from this, you have the most expensive apartment building in the country where a single apartment is 80 crores, right?
Yes.
So that's a,
Okay. So that's the level I was
that's
imagining, because the residential area is so close to that.
Yeah, yeah. So
That
that's different. So this whole micro market offers you all kind of products. So you have a 80 crore to 150 crore product, which is what a project is called 360 West, and not our comparison at all. It's a different thing. We like mid market. We like more mainstream. And
more
this four to
saleable
six.
actually, so that these can actually get sold, and the
Yes,
project
yes, yes.
we can see through the
It's
project.
easier to form a view about a mainstream product because you know a fair amount of that sells, and there is a X amount of volume in the market. For a product which is not a mainstream product, it is a little bit more difficult to know how it will perform.
Great, great. So, Sahil, let us bring in questions now. We have discussed the investment opportunity extensively. So, I'll request people to, whoever have questions, Ashish and Sahil are here with us. They'll be very, very happy to answer your queries. And so please send me a request to be added as a speaker. I'll do that, and you can send me the you can ask your question live here. Okay, so, and more details about the opportunity are in the tweet that we shared. Also, you can go to the website honest.me. You can DM Sahil, Ashish, or Pin Medium, and we'll be very, very happy to direct you uh, to the Earnest team. So, yes, so I'm just going to check if there are any requests for questions. While we are waiting for that, Ashish, I would also wanted to check with you, are your previous opportunities completely closed?
Yeah,
And till when is this one live, the Project Vista?
so I think we close it as and when, because in each opportunity we only have a limited number of NCDs, and as and when they sell out, we close it. So of course, Chennai one is fully closed out. Pune one is like literally uh, last 1% odd is left, which is also in the process of some discussion. Some investors are discussing. So very small amount left. If somebody is interested, or if somebody wants to put in, let's say 20 lakhs, they can even split it between the two. Just yet, I think maybe for a day or two that will be there, and then I think Pune one will be fully sold out. This one,
Oh,
I guess, sometime during the December is when we expect this to get sell out. It's already 33% sold out. This one, it went live last week, and we expect in the few days before.
yeah. Okay.
And generally, what
So we
also
have a couple of
happens is that
questions.
after,
Okay.
yeah, go ahead,
Go
Shaina.
on.
Yeah.
No. Go on, Ashish. Please
No, no.
finish.
What I'm saying is that basically what happens is, and to give it as a benefit to our early investors, after a particular opportunity sells out up to a certain level, then typically the debenture price increases, and then the returns drop by a small margin, maybe 0.5% or so.
All right. So we
So
have
if you want to, it's better to do it earlier. That's the
okay.
point. Yeah,
Okay. Got it. Got it.
yeah.
So let me open it out. We have Naveen with us. Naveen, you can unmute and ask your question, please.
Thank you, Shaina. Um, my question is regarding the buffer that you had kept for the sale of these units. I know you had projected uh, towards 2026 closure of all the sales, but in the deck I saw some buffer also being kept that adds to the extra cushion. If you could explain that, that will be helpful.
Yes. Uh, Currently the contracted repayment, as you pointed out, starts from Feb 2025 and goes up to up to Feb of 26. Now, while in the developer's plan, the investor payout happens much faster than the contracted repayment schedule. We have run scenarios where if the project is 6 months delayed, we're still ahead of the contracted repayments. Even if the project is 12 months delayed, what we refer to as alternate case two, then also the project cash flows are sufficient to meet the contracted repayment schedule. And even in that case, the developer is left with close to 70 crores of equity that sits behind us. So in all those scenarios, there is fair bit of buffer available in case there are unexpected delays or downsides that play out.
Thanks, Sahil. That was very helpful. So there are two alternative scenarios that you have planned in the structure. My next question is to Ashish on the whole vision behind this, Ernest. Where do you see this in 2, 3 years down the line? I know this is the third asset and it's too early to ask maybe, but 2, 3 years down the line, do you see where do you see the AUM or the offerings on a per year basis? If you can throw some light on that, Ashish.
So I mean, that's an interesting question. Honestly, I mean, there are a couple aspects from which we look at it. What we feel is that the interest rates that are available right now are certainly higher than what it will be 2, 3 years later on. It just is a function of the fact that that much lesser number of players right now are doing that. But as kind of work we are doing, a lot of foreign investors are doing, etc. More discovery of these kind of opportunities happen. Honestly, developers will benefit from better rates. In fact, part of the mission of Earnest is to actually showcase how real estate financing can be done in a better manner. And even our partners, let's say today you invest in Neon Group, they do a good job for you. I am sure when we come up with the next opportunity for them, we will be happy to do it even 0.5% lower or so, right? So our whole idea is to help real estate community discover itself, bring it to a wider set of audience, uh, to the investor audience, showcase opportunities which are giving decent returns, right, and not go up the risk curve, but keep returns at the reasonable level. So the market is very large. It's a very large requirement today. On an annual basis, real estate construction sector needs about close to $15 billion per annum, right? And compared to that, capital availability is less. So I don't want to pick a number, and honestly, we are not trying to build earnest from the perspective that we got to get to a certain AUM. Our focus always is whatever we are investing into, is that the right opportunity for ourselves, for our investors, for earnest as a platform. So to us, that's more important. But we do feel we wouldn't be doing all of this work and exercise unless we feel that it is a sizable thing and there could be regular opportunities for investors and also somewhat more varied kind of opportunities, over the next few years. But we will stay
Great.
focused on fixed income opportunities. That's our thought process.
Thanks. Just one add-on question to this. Since you mentioned varied opportunities, what would they ideally be? Will they be plotted developments also included, or just the buildings?
It could include. We are already looking at few plotted ideas. It could be other sectors. There could be industrial or warehousing. There could be hospitality. I mean, under the institutional side, we do all of this. So no reason why some of those we will also not bring to invest.
Thank you so much, Naveen, for your questions.
Thank you.
Roshan, can you do you want to go ahead ask your question?
Yes, thanks. The question, firstly, thanks Ashish and Sahil. I mean, great comments. I want to ask you that now, let's say, suppose the developer sells faster than expected. Does he then repay faster, or is that under your control? How does that work?
Yeah, so in that case, he does pay faster. So the whole idea, and this is how it is set up. So is basically whatever cash flow that come in from sales can only be utilized for two purposes. One is for construction of the project, and second is for servicing this facility. So if it does come faster, then yes, then the repayments will be faster. And it's all of this is agreed going in, so it's not something that we have to discuss and negotiate and figure out in the future. It is all agreed going in, so developer and we as investors are on the same page with respect to this.
Got it. The other question is that I was just going to the developers, website, and there it says that there's, yeah, I mean, have you guys? I mean, because the your website here says 60 crores, and is the total facility, and so have you already invested 30 crores, and then this facility is another 30 crores, so that makes the total 60, or somebody else has invested the other 30 crores, and you all are, I mean, Ernest is putting 30 crores.
Yes, so it's like that only, and that's kind of clarified in our FAQs also. So overall facility is 60 crores. Out of the 60 crores, developer has drawn about close to 40 crores now, of which we have taken 50%, and another fund has taken 50% of it. And the balance 20 crores, developer will draw in a few months' time, 3, 4, 5 months' time, as and when they need it for the construction, right? At that point in time, we will invest this another 20 crores between us and the fund, and maybe launch that as a second tranche of this facility at that point in time.
Got it. Thank you. All the best. I mean, I have no other questions. Yeah.
Thank you,
Thanks,
Roshan.
thanks, Rohan.
Ashish, while Roshan asked if an earlier completion could lead to a sooner payout, what if there is a delay? I mean, does the principal repayment get delayed?
I mean, so that's what I think Sahil was covering in the earlier response. So the way the structure or the investment is designed is that it allows for certain buffers. So company is very confident that they will complete the whole development before the end of 2025. And when we look at the construction plan and the timing it requires to do this kind of a project, plus the diligence advisors report, which is CBRE in this case, so all of that is fine. But despite that, if there is a certain amount of delay, compared to whatever is management projections, even if there is 1 year delay, it should not impact the servicing, and that much buffer is already built in. And if tomorrow there is a completely unforeseen scenario that plays out, like COVID was clearly one, like that, which shuts down construction or does something, and if there is even more delay than that, there's still enough and more room, or enough and more cover in that sense. So it will happen, but it can then delay the contracted payment. I mean, seems like a remote possibility to us, but since you asked, I must mention that.
Great, great. So, Ashish and Sahil, thank you so much. I think we have covered this opportunity and how beautifully Ernest is progressing very extensively. And I am thankful to you for enlightening us with yet another fixed income opportunity for all our investors. And once again, if the investors are interested, they can reach out. They can find more details on Earnest EARNEST.me, and the details are there on the FinMedium handle as well. You can reach out to us, DM Ashish, DM Sahil. So we'll be very, very happy to get you through to the Earnest team. Any closing thoughts, Ashish, before we say goodnight?
Uh, Not really. I think just thanks to everyone who took the time at this hour to listen in. And we're very excited and welcoming of people who may want to explore more.
Absolutely. Thank you so much, Ashish. Thank you, each one of you. At one point of time, we had 100 plus listeners as well. So it was a great, uh, uh, I think the opportunity is so exciting that everybody wanted to stay tuned in. So thank you so much, everyone. Thank you, Ashish. Thank you, Sahil. The recording of this session will also be updated on our Twitter handle. So for those who missed some part of the session, the details are there as well. Thank you so much. Take care, Ashish. Take care, Sahil. Take care, everyone. Good night.
Thank you. Thank you,
Good
everyone.
night. Thank you.
Good night.